Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. And guys, we just interviewed Bob Fraser, seasoned entrepreneur, author, podcast host, and author. Anthony, what was the takeaway or two you had?
I'm real excited for this book to come out. But he dropped some good wisdom here, and
He did.
one of the many was he talked about the myth of diversification. A lot of times people assume, oh, if I'm in the market, but I have spread during different small cap, large cap, and foreign, that you are diversified. But he pointed out, how come when Amazon tanks, like, you see that red, but you see the red everywhere else? And the same thing when you see green, like you see green everywhere else. And he talked a lot about alternatives to Wall Street, which is music to our ears. So he shared some of the asset classes of these alternative investments, but he talked about the superpowers of a few. So I thought that was very enlightening. Cameron, what about you?
I took a bunch of notes. Great interview. And again, he's got his book coming out. It doesn't come out till September 2nd. So this might be around the time this podcast is being released. So if you guys are listening, make sure you look this up. Invest Like a Billionaire by Bob Fraser. One of Bob's kind of reasons he's been so successful in this space is because of his ability to identify macro trends. And you'll hear that as we go through this interview. The takeaway that I had was actually kind of his parting sentiment, what he said at the end. And what he said was take the time to become not only an investor, but become a great investor and approach it with the mindset that I can do this. I think a lot of times individuals will get overwhelmed by just finance in general. But man, you know what? If you just kind of proceed with that mindset, I think that'll help a lot of our listeners. He gives a great example at the end. And so make sure you guys listen to this interview in its entirety. Stick around for the end. He gives away a great offering in regards to his book at the end.
Well, and I think one thing that is important that he talks about with these alternative investments is you do need to, as you mentioned, Cameron, learn about how to evaluate these deals. And that's why we've developed the Passive Income Lab. So we're going to do some more content, go into some more details on that, but that's going to help you achieve that passive income to be more than your monthly expenses. And you know what else is going to help you learn more is we are bringing Bob back, and we'll be doing a webinar with him. So not only can he go deeper into some of his philosophies, but you also have that ability to ask questions. So encourage you to listen to this podcast and check out his book. Enjoy the episode.
Take care. If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christiansen, along with our co-host Anthony Faso. And today's guest is someone who's built a roadmap to help you break free from the Wall Street mindset. Bob Fraser, author of Invest Like a Billionaire. Bob, great to have you here.
Yeah, so fun to be here with you guys.
We had a pre-phone call with you and prior to this interview, and we talked a little bit about this book that's coming out. And from my opinion, right, this book kind of peels back the curtain on how the ultra wealthy invest, and then shows us how to apply those same strategies, even if you're not a billionaire. So, Bob, what inspired you to write this book?
Yeah, well, I've had a deep history with the public stock markets, and lost everything a couple times, and really it's what led me to start Aspen Funds, which is focused on building private alternatives, something that has more control. Right, when the stock market randomly takes a dump, but so let's say Trump implements giant tariffs and the market crashes. But you own an apartment complex. Well, does the guy paying the rent, did that change anything for the guy paying the rent? No, you still earn that. So the idea is to get something with more control, less emotions, less volatility. So I started in alts, really fell in love with alts because of just being able to control your destiny a little more. And And as I've learned over the years, the power of these alts, realized how few people are in them, and how most investors are too light in alternatives. And so they're subject to this kind of massive volatility of the stock market, and the emotional toll that takes, and miss out on the benefits of what the big boys are doing, what people don't realize. So 1985, all the billionaires were doing the same thing the little guys were doing, 60-40 portfolios. That's pretty much it. Then a guy came along named David Swensen, who took over the Yale endowment and said, hey, why are we doing this? And he was an academic, and he studied under a Nobel Prize winner who and realized that he could get higher returns with lower risk by implementing modern portfolio theory, and primarily through private alts. And he did that. And over his 35 years, earned 13.1% returns at a time when traditional investment 60-40 was earning 8.8. The difference there is 4x, 4 times the returns. So, if you have $100,000, I think you'd get 1.9 million after 35 years, but it would be $8 million had you been able to earn 13. And so what's happening is the little guys are left behind. They're still in 1980s land, right? Not aware. All the billionaires, all the family offices, all the endowments, all the pension funds, they've all moved to this model, and the little guys have just been left out. And so it's time for somebody to pull back the curtain and show people how to enter into this world where you earn higher returns with less risk.
Bob, I gotta ask. I know Anthony's thinking this.
No, and I'm going to interrupt him because this is just too gold. Bob, can you mind when you're saying alt? Cameron's probably thinking lifestyle. Can you
Punk?
Can you define alt as you were saying before for Cameron?
Yeah, it has nothing to do with lifestyle. It has to do with investing style. So private alts,
yeah.
so the public markets are basically big, giant companies that have done IPOs, and their stock trades in this live public auction that's pretty much chaos, right? And makes very little sense a lot of the time. And so private alts are private placements. So these are, an apartment complex that's syndicated. You go become a part owner of that business through investing in with a sponsor, or private equity. So let's run the gamut here. It's private real estate. These are professionally run private investments, private real estate, private credit, private equity, venture capital, hedge funds. These kind of things are private alts. So they don't trade in the public markets. These are private investments.
Love it. Okay, thanks for giving the definition. And then to go back, kind of the point that you were making is that there was a separation between kind of the ultra wealthy versus kind of the regular average Joe. What do you think is the biggest reason that there is that separation between the two categories there? Is it just lack of information? Just the regular guy doesn't know about it?
It's just a knowledge gap.
Okay.
Yeah, it's primarily a knowledge gap. It's simply not known, right? And I think then you have the fact that the gatekeepers, the financial advisors of the world, are really won't help you with private alts. And I have a financial advisor. I'm pro financial advisor, but honestly, they won't help you with this. They won't help you go into this world. They'll resist it and they'll fight you unless you have a unicorn advisor.
Yeah. What?
Yeah, there's a lot of reasons. I have a chapter in the book on 7 things your financial advisor won't tell you, but here's so there. As an RIA, first of all, as an RIA or a BD, I actually studied for the Series 65 to become an RIA. I was shocked. You don't have to know anything about alts. They teach you about about stocks, bonds, and insurance, et cetera. Alts, they have like a couple pages. So literally most financial advisors know very, very little about alts. Add to the fact that, most of these guys work for big firms and you're under quotas. So the idea is you're primarily want to, they're commissioned based on getting people into the products that they want to get them into, and they have quotas. Add to the fact that they're all in platforms, right? They all have specific platforms that the alts aren't on. So literally, I have to tell my financial advisor, I'm taking money away from you. I'm going to throw it into this alt over here in another room. And, it hurts the financial advisor. So there's all these many reasons, but they just won't help you. And it's the system is just really not set up to help you invest in private alts. Now it's changing. There's huge pressure. The word's getting out about private alts. And there's huge pressure from investors on their financial advisors to kind of get with the times. And so advisors are slowly but surely coming along and changes are being made, but it's slow.
Did we discuss the title of the book? I don't know if we just mentioned you have a book coming out, but you mind sharing, Bob, what the title is? And there's a lot of personal finance and investing books out there. What makes this one different?
Yeah, it's called Invest Like a Billionaire. And that's literally what it is. What people don't realize is what billionaires do, what pension funds, family offices, the ultra wealthy do is very different than what they're doing. And so the ultra wealthy, they do invest in the public markets, but it's literally between 20 and 30% on average. And they invest 55% in private alternatives. And the little guy, do you know how much the little guy is in private alts on average? 2% versus 55. And so they don't have the advantage of these higher returns with lower risk that can come through private alts. And this book has never been written. There's nothing like this out there. No other books are written to a normal accredited investor and kind of giving them the roadmap, right, for how to actually follow in the footsteps of what they're doing. I hit a whole mindset chapter of really how billionaires look at the world, how they treat debt, how they do this, and how they operate different. Then I go into every single of the alts classes, right? Real estate, private credit, private equity, how they work, hedge funds, how they work, when they work best, how to include them in their portfolio, in your portfolio, what their superpower is, right? How to maximize these assets. Then I go into how to optimize, how to build it, how to put them in a portfolio, how to design a portfolio, how to do due diligence, the whole thing. So it's a how-to guide of how to crack the code on what these guys are doing. And it's life-changing. If you can earn 4 times, imagine being able to get, 4x out of your investment, than you're making today. I mean, that's what is possible with this kind of thing. It's worthwhile to go and educate yourself and learn what they're doing.
Bob, I don't know if our listeners realize this, but your book doesn't come out until September 2nd, right? And
Yeah.
so we have not, Anthony and I have not had an opportunity to read your book yet. And so maybe some of those points you just read, we're trying to pull it out of you. So I might come back to those. But one of the points I'd written down during our pre-interview was the idea of diversification, right?
Yeah.
I think that's a message that a lot of people are preached to when you're kind of building your wealth. And one of the things you said is this is a myth until you hit a certain point.
100%.
Yeah,
so everybody knows
that approach with our listeners. Good.
Yeah, don't put all your eggs in one basket, right? But
Yeah.
but what if every basket is identical? And that's what's happening today. So you ever trade in the stock market and you ever turn on the screen, and everything's red? Does that ever happen? It seems like when there's a red day, everything's red. What's going on? Why when Amazon tanks their numbers, does REITs, real estate investment trusts, go down? Right? It makes no sense. But that is the reality. And so there's a myth today of diversification. And I have some charts in the book. I show how, especially post Great Financial Crisis, diversification is a myth. Everything trades together. Everything moves in unison. And it's almost impossible to get diversification right now. And people don't realize. So the S&P 500, right? Most common, index people want to buy, invest in the index. Do you know a third of the S&P 500 index is 10 companies? A third. How's that diversification? You got 10 companies. You think you're buying 500, you're buying 10 mostly. And add to the fact that everybody buys because everybody buys these indexes. Well, the index all stocks move together because they're all part of the same index. And so diversification is dead. And diversification is really, really, really important. What happens is so mathematically you want to buy things that zig when other things zag, right? That's what you have. And if you do that, you avoid drawdowns. And drawdowns are the killer of compounding. Losses are far more important in investing than returns. You want to minimizing losses is way, way, way more important mathematically than maximizing your gains. And the way you minimize your losses is you must diversify, but you got to have true diversification. And let's call that uncorrelation. They can't be correlated, and that's a mathematical term. And by the way, the only way to get diversification or uncorrelation is private alts. So oil and gas. It has nothing to do with what Amazon's returns are, right? Apartment complexes, private credit, private equity. These things they're highly uncorrelated to the stock market and to everything else you have. And that's the key. So you avoid drawdowns. You avoid these big, giant moves down.
Bob, I think a lot of the first reaction when people hear about these private alts is I think there's an assumption that they're going to be riskier than giving your money to Wall Street. Can you, what's your take on that?
Yeah. Well, as a guy who's lost everything in the stock market multiple times,
But you said twice, right?
I definitely refute that. Okay. Here's a fact. One of my favorite charts in the book. It's a chart from JP Morgan, and it shows, so in just public REITs, real estate investment trusts. So these are stocks that own real estate, right? The difference between the best managers and the worst managers is about 1.5 percentage points of return. Not much, right? So the best guys and the worst guys are pretty much the same, right around, 7.5%, 8% returns. The private markets, private real estate managers, the best guys are doubling the returns.
Wow.
Of those guys. The worst guys are losing money. So yes and no. Yes and no. They are riskier if you can't select good operators. If you can select good operators, they're not. I mean, the truth is owning you own an apartment complex. Is that riskier than owning Amazon stock? Not really. It really, there's nothing inherently risky about that. Unless it's over leveraged or under, poorly managed or whatever. But generally they're fairly safe. But, in the public markets, an investor, you really can't beat the public markets. It's really, really tough. Mathematics shows you really can't do it. Private markets, if you want to try and become a crazy good investor, private markets is your hunting ground. You can go and it's really sponsor selection is everything. Becoming a great sponsor selector. If you're good at that, you can absolutely beat the markets.
How do you get good at evaluating a sponsor and finding out the good operators?
And I have a whole chapter on that, how to do due diligence on that. But well, first is read the dang book, okay? So that way you won't make the mistakes I made.
Perfect.
Right? So I made every mistake you could possibly make, and I'm not making those anymore. So really, you do. I'm joking, but you want to learn from those who've gone before, and find. It's not that difficult to find great sponsors, and there's lots of them out there. So also lots of marginal sponsors, and could be good people, but just not great, sponsors. And so, one, learn the lessons, spot the red flags, and then really it's network with other successful private alts investors. This is, and it's not, who you might think. It's not your attorney. It's not your, it's not your CPA. Unless you're a good private alts investor, a successful private alts investor, you probably shouldn't take their advice. So network, go to conferences, listen to some podcasts, read the books, and join masterminds with these successful private alts investors. That's the best way, and find these sponsors. But there's some real red flags. I mean, you want your sponsors to co-invest. That's really the number one. You want to see they have skin in the game, right? Not just fees that they're getting as income. You want to know they have skin in the game. That's the number one criteria. Number two is track record. So those are some red flags if you don't have those, but it's not that difficult. It's honestly more difficult to be disciplined than it is to see the red flags. Like all the mistakes I've made, I actually saw the red flags, right? I just wasn't disciplined. I'm like, they're good guys. It's going to work out. Thankfully I didn't do that with my investors. I just did it with my own personal cash, but, so you just got to be disciplined, and that's, if there's something that's happened through me writing this book, it's putting all this knowledge together that I've gained over the last couple decades. And I'm becoming a more disciplined investor, right? To follow the disciplines that are not difficult. They are not difficult. It's just, if you follow these, it's a roadmap and a framework that just is proven to be far superior in both getting better returns and taking less risk.
Bob, you gave us kind of an outline of your book, and you said you got a chapter on mindset, then you've got some information on alternative classes, and I think you said what they are and what their superpower is. Bob, if you wouldn't mind, I know you've kind of built your reputation on ability to kind of identify some macro trends. So I would love to hear from you what maybe two of those alternative classes are and what their superpower is.
Yeah, absolutely. All right. One is real estate. So real estate, its superpower is inflation. It eats inflation for lunch. Okay. Especially given the fact that you typically leverage real estate. So if you take $1 million and you buy a $10 million asset, just put crazy numbers out there, and inflation is going to increase the value of this asset. It's not increasing the value of your $1 million investment. It's increasing the value of your $10 million investment. So the leverage means you're multiplying inflation by, let's say, 3 to 4x, right? So you're getting this inflation benefit. Meanwhile, on the other side, if you're leveraging, you're borrowing money, you have negative cash, right? Well, so inflation is a cash eating machine. It destroys cash. It destroys the value of money. So your debt is decreasing in value. You get this double whammy. And if there is and literally, we talk about the miracle of compounding. Even if you make the crappiest real estate investment in the planet and it just is stable, but you have inflation, you will compound. You will get compound returns from inflation alone. People don't realize how powerful inflation is. At 4% inflation, the value of an asset will double in 20 years. Double. And that means if you've got if your $10 million apartment complex will become worth 20 millions, but if you only put in 2 million, you're gaining 10 million in gain on a $2 million investment. You follow me? I mean, the numbers are nuts. So inflation is a superpower as well as tax advantages, huge tax advantages for real estate. So those are its two superpowers. I'll say another one, private credit.
Yeah, please.
So private credit is real estate lending, right? So this is where, we have a couple private credit funds at Aspen. And so we make loans to real estate investors. And instead of, so at the capital stack, you've got the senior lender, the bank, then you've got lenders like us, pref equity or mezz debt. And then you've got the common equity. We're in front of all the common equity. So it's way safer. And we're earning double-digit returns with almost no risk, right? Or certainly way less risk. Add the fact, so you get equity-like returns with debt-like risk, and it's liquid. So the big problem with alts is liquidity, right? You go buy apartment complex. Well, you may own that for 5 years, may own it for 10 years, and you wanted it for 5, right? And so liquidity is a problem, but not with private credit. Most private credit has liquidity options. So we have one of our funds has 1,000 mortgage notes in there. Well, last quarter, I think we had 80 notes pay off. And so we have this massive internal liquidity all the time. It's been going for 13 years. We've never missed a liquidity request from our investor. So its superpower is high cash flows. High cash flows. Imagine double-digit cash flows. Anybody retired out there? Double-digit cash flows with safety and liquidity. That's a set of superpowers.
Bob, you've got me interested. I can't wait for this book to show up. The other thing that I had written down during our pre-interview was talking about this alt continuum and kind of climbing that. Could you tell our listeners what that is and then the strategy behind that?
Yes. So the alts continuum is kind of it's to make the approach to private alts approachable. And it's how to get started in this, and for various levels of capital. So maybe you're $1 million net worth. Where do you want to go? Do you really want to start investing in venture capital, right? And hedge funds and these kind of things? Probably not. So the first thing you want to approach is the first thing in the alts continuum is private real estate. One, it's easy to understand. Right. It's not difficult to understand. Two, it's easy to leverage. It has a lot of benefits, including the ones I just said. So approach it like that. So you first invest there. The second step, 2.5, is private credit. Maybe you need some income. So you start approaching that. Then it's natural resources and infrastructure. Then it's private equity. And so as your net worth grows, you typically you start climbing this curve, and the sophistication level is going up as well. And so it's easy to approach and to start to build into these things. And I've actually built an allocation model. One of the main things you want to do is be disciplined in your allocations. Don't overinvest in any one bucket. And so I show you at $1 million net worth, here's how you need to be allocated across the alt spectrum or the alts continuum. And at a $10 million net worth, here's how you need to be allocated. And at $100 million net worth, here's how you need to be allocated to maximize kind of the benefits of these type of investments.
Bob, I would ask for a little insight on that, right? You've talked about the book and you said, hey, this is a rich dad, poor dad for the millionaire. I think that was what the publisher may have called this, and you just kind of referenced, I forget what it was, but it was that first tier, right? Can you expand on that piece just a little bit?
Yeah, I'm not sure I understand the question. The first tier. So the million. So I have 3 tiers of allocations, if that's what you're saying. So the $1 million investor, the $10 million investor, the $100 million investor. Is that what you're asking?
Yeah. Thank you. Let me preface that or rearrange that. Is I think most of our listeners are going to fall in that first tier of being kind of $1 million investor. If you could maybe give us a quick overview of the allocation that you would recommend.
Yeah. Well, gosh, now you're putting me on the spot. I gotta pull my notes up here. Because it's a table, but it's roughly, let's say, 35% public markets, 10 to 15% cash and bonds, and maybe even it's like 25% so 10 to 15% cash, 10 to 15% bonds, 35% public market. So you're still heavily in the public markets, then 20 to 35% in real estate and maybe some private credit. So you're just climbing the beginning of the alts continuum. I could actually look up the numbers here. So Sarah, I have your $1 million investor, 10% cash, 15% bonds, 35% public equities, 30% private real estate. So, you're getting a lot of real estate, 5% private credit, 5% energy, natural resources, and infrastructure.
When I hear you say energy, natural resources, what's the superpower behind that? Is it growth? Is it depreciation? Why do you have that in there?
So natural resources is the single most uncorrelated of all asset classes. It is the most uncorrelated. Pumping oil or gas out of the ground has nothing to do with Amazon's returns, right? Or whatever. It's the most uncorrelated. It has the highest tax benefits of any of any investment class by far, including benefits against active income earners. So you're a high earner, you're a doctor or a lawyer, you can get tax benefits to active income. That's even possible. And today, its superpower is it's the most discounted asset class under the sun. You're seeing it is so out of favor right now. It's like buying Amazon in 2002 at 35 cents a share. Okay. That's what buying oil and gas is right now. Okay. And that literally happened, Amazon was selling at 35 cents a share. And no one wanted it. No one was buying that. That was all internet hype, right? So it's just really time right now. It's the single most, it's a generational buying opportunity, one that comes along once in a generation.
Bob, speaking of opportunities, if somebody's listening to this and wants to take some action, whether it's ordering the book or getting a hold of you, what are some of the first steps that they can take?
Go to thebillionairebook.org, and pre-order this book. Okay. One, that helps me, as we pre-order this book and hit the list to help get the word out on this book. And you get a bunch of benefits. So you're going to get the first 6 chapters to download for free. You're going to get my top investments for 2025 and 2026, a webinar, and you're going to get another webinar on the 7 things your financial advisor will not tell you, and the Ballers framework, the 7 rules of billionaire investing. So that's all free. And just as a thank you for pre-ordering the book, and then you get the book right on your doorstep as soon as it's out here in just a couple of weeks.
Man, I went to Amazon.
I know. I was like, Bob, that's where I had the pre-interview to give us some insight.
All you got to do is take that receipt number, go to thebillionairebook.org and plug in the receipt number, and all those will be right there for you. So
okay,
you have a good thing, buddy.
Excellent. Love it. Bob, any last words that you'd like to share before we kind of wrap this thing up? Anything else on your mind?
Just this, so many people I find, I have doctor friends that spent, 8 years learning their trade, and they won't spend 3 hours learning about investing. But, if you do the math, so a doctor that earns $400,000 a year over a 40-year career is going to earn $16 million. Right? Did you know if that doctor took 20% of her income and saved it and was able to earn just 7% returns for 40 years on just on 20% of the savings, she would equal her entire career of earnings, 16 million.
Wow.
Yeah. And if she was able to get, that's 7% returns, which is a 60-40 portfolio. If she was able to get 13% returns like David Swensen was, do you know what the number is? 13% returns, $84 million. That's what she would be worth. Yeah. Is it worthwhile to take the time to become a great investor? Yes. It is the single greatest payback on your time that is possible, is to learn to rock this world of investment out. And it's not that hard to do. Take the time to educate yourself and become a great investor. And, so I think people have really missed it by, just focusing on their career or their business and not focusing on becoming a great investor. That's one of the biggest things that's different about the ultra wealthy, right? They approach their investment as a business. Their investment is their business, right? They're in the investing business. Well, so are you. You are in the investment business. If you're listening to this podcast, go put yourself in the investing business. Invest in investing. Educate yourself. Get smart. Join masterminds. Listen to podcasts. Read books. And it's the best payback you will ever have for any activity in your entire life.
I tell you, Bob, that is so important. And I would tell you, one of our clients was asking me of where they could learn more to invest. And I told them that we've created this passive income lab that actually helps you understand not only what kind of investor you are, but how to read that private placement and to make sure or what questions to ask those operators. And I told her, like, hey, it's a 12-week coaching plan and like 1 hour a week. And she's like, oh, I don't have time for that. LOL. And I'm
Exactly.
like, let's see who's LOLing 20 years from now. I mean, when she didn't take just an hour a week to be able to invest, to be able to allow you to
Yeah.
make these financial decisions.
It's not focusing on the long game. You're not playing the long game. That's exactly right. And so I just hope this wakes people up and realizes, let me do this. I can do this, right? We all start at zero, everything we ever learn, right? So you start at zero. So what? Start at zero. Learn it, right? Go figure it out. And shout out to what you guys are doing. You're doing a great job and educating people. So, go get Anthony and Cameron's deals and educate yourself. Go buy these books. And there's lots of great materials out there. Take the time to educate yourself and become great at this. There's no better payback you will ever have.
Well said, Bob. Appreciate you coming on the show. Appreciate the insight and knowledge that you dropped on our listeners today. We look forward to bringing you back after I've gotten into that book. I'm going to have more questions. So you will be returning. Looking forward to it.
Well, I think we even talked about bringing him back for a webinar, right? So you have that ability where he can go deeper and we can ask him questions. So I don't know when that will be announced, but we will be doing some marketing to let people know where you can hear Bob and discuss more details. More importantly, ask him questions. So, Bob,
honestly,
thank you.
I can't wait. I'm passionate about this stuff.
We can tell. We can tell.
Bob, thanks for coming on. Appreciate you.
All right, gentlemen. Thank you.
All right.
Go make it a fantastic day.
Take care.
If you like this video, I know you'll like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.